Good morning. Welcome to Market Day Report and another week. How about we jump right into the markets? We have Brian Hoops waiting in the wings. We're going to break down where we're going this week with the markets, but let's start with overnight trade in corn. Down a penny 3/4 on the front 3 months, December 4.23 and the March at 4.40. What about the soybean trade overnight in the red? November at 10.32, down 5 3/4. Actually was kind of right in the middle of the trading range, and a 6-cent loss at 10.50 on January. Now, wheat, we'll start with the Chicago contract. Front month December, 5.89, down 3/4 of a penny. July down a penny and a half. What about hard red winter? Well, 2 3/4 lower, 5.95 1/4 on the December. July lost 3 cents. And in spring wheat, down 4 3/4. December 6.33 3/4. Roll out to the July contract, down 3/4 of a penny. And the cotton market in the overnight session, 73.69 on December, up 42. Brian Hoops, President, Midwest Market Solutions. Brian, what are we watching?
Hey, good morning, Tony. Hope everybody had a great weekend. So let's talk about some good news in the grain markets overnight. We had a private sale announcement this morning, 155,000 corn sold to Mexico for this upcoming year, and then 172,000 metric tons of soybeans, and that was sold to an unknown destination, which I think everyone assumes will end up being China because they do switch a lot of that product from unknown to Chinese origins. So we start off the week with a couple sales. That's great news, and that's really the only positive news that we can come and talk about after this weekend, because you look at what happened Sunday night. We gapped lower in the soybeans. We traded lower both corn and beans. We closed below technical support in the overnight trade. Now maybe we can get back above it here during the day, or maybe go fill that gap. But it seems like with the weather pattern changing in South America to more of a monsoonal pattern where they're getting more rains. They had rains over the weekend, more rain this week, and then by middle of the month, more even heavier rains start to fall. That change in the weather pattern combined with active harvest pace here in the U.S. is probably going to keep pressure against these corn and soybean markets. We have a supply and demand report coming out on Friday. The news wires are gathering their estimates, this today, tomorrow. They'll come out with those, but I suspect we're going to see expectations for an increase in corn yields, maybe soybeans even lower, because some of those yields have not been as good, especially later planted beans that were more susceptible to that August heat. But right now it looks like these corn and soybean markets starting to kind of roll over to the downside, especially as you look at the U.S. dollar index moving to an uptrending market instead of a downtrending market.
Yeah, you pegged it there on the dollar. Let's keep that theme going as we head into a break. We're back in a moment. We'll talk cattle and hogs. Market Day Report continues after this. Welcome back to Market Day Report. And a Monday, let's look at the dollar index, and our special guest back in just a moment, Brian Hoops. And it's kind of how we ended the last segment, talking about the dollar index. Little weakening as we start off the morning with December at 102.17. It's down 10 1/2. But let's segue now over to the livestock markets. October live cattle, buck higher, 187. December at 187, 60 higher on the session Friday. Remember, we don't trade livestock futures in the overnight session. October feeders, 65 higher, 249.62. And November, buck 15 higher at 249.27. And the hog trade on Friday was lower. October down 15, December down 25, 76.15. Now, cash was higher. Texas and Kansas, 186, up a buck higher for the north at 187 to 188, and dressed on the cattle, 296, up 2. And maybe a good chance to bring Brian Hoops back in. And Brian, what happened? Was it cash driving futures or futures driving cash?
That's a good question, and I don't know that there's a good answer for it. Last week we saw futures really push higher into the middle of the week, anticipating that stronger cash trade. Well, we did receive better cash trade than what we thought earlier in the week, but maybe not as strong as what the futures had anticipated. By Friday, October and December both were trading 187, and we only had 186 trade in the Southern Plains. So that means with deliveries starting this evening, there is some possibility we could be talking about deliveries tomorrow. That's a possibility now that the futures market is trading premium to the cash. We haven't seen that for several months, and that's one thing trade will be watching. How does the futures market respond to it? Cash is called stay to higher right now. They're still assessing show lists. They'll come out later today, but the cutout values are trying to turn higher. Decent kill numbers last week, so it looks like Packers will want to keep that momentum going. Probably gonna have to pay up for the cash markets this week. But yeah, we're looking at this market here probably out of the gate, maybe correcting a little bit from Friday's gains because the cash trade was only 186. But later on this week, probably going to try and advance once again and push back to the upside.
Okay, Brian, before I let you go, can we bring up crude oil prices and the crude market hitting 6-week highs last week in November, up 117, 75.55. Still more upside potential?
Yeah, I think there's still wanting to push this market higher. That unrest that we're seeing in the Middle East and stocks down once again this week, as far as the build goes on the EIA report. Last week it was another friendly report. So I think there's more upside to push higher here into the upper 70s at this point in time. But to get above that into the 80s, I wouldn't be chasing that rally at all.
Okay, Brian Hoops, Midwest Market Solutions, and we'll see you back here on Wednesday morning.